Dear students and working accountants, welcome to my Smart Tally Prime YouTube channel. My name is Babu Rao from Hyderabad. Today, before entering into our topic, a advice for you. That is, if you want to learn Tally Prime with GST, TDS, TTS, everything perfectly, gaining expert knowledge and become expert accountants, please follow all my videos in the same order in which I uploaded the videos. So all the serial number wise. So number wise, you follow them, learn well, and practice them. Then only you will get expert knowledge and will become expert accountants. Then next one is every person, everyone visiting my channel, please subscribe my channel. If you have not already done. For already subscribed, it's okay. Once only you can do. Second time you can subscribe. And subscribe definitely and click the bell icon and you select the option all. Then you will get notification for all the videos which I upload. And then you share my channel Smart Tally Friend with all your friends. Not only that, with anyone who want to learn Tally Prime, GST, GDS, TCS, everything, you share with them also. And while watching the videos, all videos, please watch the video till the every video till the end, because when the video is started, in the beginning, we select a topic, and first of all, we will explain about the topic and any rules are in that according to that, and any settings to be made, all this will be explained. And then we will go to the practical work, go to the Tally Prime, and we will see how to implement the rules or settings in Tally Prime and how to record in Tally Prime. That's why if you skip in the middle, you will know only the theory part only we can hear. And after that, the practical part in the Tally Prime, you cannot understand. So please watch every video till the end. And at the end, if the video is good, please like my channel by clicking the thumb icon. And in the bottom, after the description, there is a comments section. In that comment section, definitely don't forget to post your comment. Comment means your idea about the video. How is the video? Is there anything bad? Not understanding anything, you cannot understand or anything. You post the comment definitely. It is the only communication between you and me. Okay. And then another one is this channel and all the videos in this channel are everything completely free. You can follow them. You can view all the videos any number of times. You can learn well. In addition to this is completely free. You can learn Tally Prime. But in addition to this, I am undertaking online classes also, because offline classes is not possible for me. For the time being, I am not taking up offline classes. Only online classes I am taking up. If anyone is interested, please send your details. If you interested to join the course, please send your details like your name, place, qualification, what is the work you do, student are working, all the details you send me. My contact details are available in the about section of this video, my email and my mobile number. Send the details to email or in the mobile, don't call me. You send WhatsApp message with your details. I will call you and I will talk to you. And when the next batch is started, I will inform you so that you can join and learn the course if you are interested. Okay. The course mostly it will run for 1.5 months minimum. 1.5 months. It will run 1.5 months to 2 months, because I teach many subtopics, because not like other institutes, I teach and I take up many topics. That is why it will take more than 1.5 months. Definitely 1.5 months to 2 months. Okay, that is the thing. And so this is about my channel and my classes. And now we will enter our our lesson channel. We will enter the topic today. Today our topic is how to prepare bank reconciliation statement in Tally Prime. This already in become also you did it. That is manually you did it. Here we will do it the reconciliation in Tally Prime. In the Tally Prime, how to prepare the bank reconciliation statement. First of all, what is bank reconciliation statement and how to prepare the statement? 1 minute. So, what is bank reconciliation statement? Because, see, every business will have a bank account and will carry on many transactions to the bank. That is, you will deposit cash in the bank. Sometimes you withdraw cash from the bank. And whenever you receive money, that is in the shape of checks. When you receive checks from our customers, those checks that are receipts, all the receipts and checks, they will be deposited in the bank immediately. So cash deposit or checks deposit, that is the checks received, the receipts of checks will be deposited in the bank. Similarly, we will withdraw cash from the bank as well as we will issue checks to outsiders. Checks to outsiders. While receiving, we will receive checks and cash also. And similarly, sometimes we will receive the amount from customers through bank. That is through bank means left turn or to GST will get. Similarly, when you are making the payment, you can make the payment by check or you can make the payment through bank also. That is NEFT or RTGS also. Like this. So the transaction will be carried on between the bank and the company and our business. In such a case, whatever you can transact, we carry on a transaction with the bank, we will record the transaction immediately in our account. That is in the tally in bank account. Deposited means, but I tell you, when you deposit, checks or cash, so definitely you will debit the bank account. See, so suppose you are cash you are depositing. So in the contra entry, cash account get bank account is debit. The cash is going out, bank is receiving. So all the deposits, similarly, when you receive from outsiders, customer B, it is a receipt. You receive from outsider, the account is credited, is given, and you deposit it immediately in the bank. So bank account is debited. So all the deposits, that is cash deposit or checks received from other outside, from customers, that will be deposited in the bank. All these deposits will be debited in the bank account. So when you debit the bank account for the deposits, the bank account, what the bank people will do is, bank will credit our account. See here, if I debit your account, you will credit my account. Similarly, whenever you make the deposits, all this will be debited in the bank account in our books, but in the bank, they will credit our account. See, for example, I will show you. See here, first of all, we deposited 3,04,000 in bank and debited the bank account. So what the bank will do is, bank will credit the cash deposit, bank will credit the amount. That means all our deposits will be debited, all our withdrawals, that is, even if you check to others, the bank will make payment to the other party, but it considers the money is paid to you. That means we have taken the money. So all the checks issued as well as money withdrawn from bank will be credited. For example, you see here, we made payment to supplier A. That is credited. So here, the check number is 111. So here, the same check number 111, see 111, it is debited. We credited, they debited. So all the deposits will be debited by us and the bank will credit. All the withdrawals are payments, deposits are receipts, cash deposit or check deposit. Cash issued cash, checks issued as well as withdrawal of cash, that will be created in our books. It will be debited by the bank. Okay, so this is the thing happens. But now, whenever you debit the bank account, the bank has to credit. When you credit the bank account, the bank has to debit. So if everything is okay, we debit the bank account, bank will credit our account. In such a case, so there will be no difference. We debit 5,000, they will credit 5,000. So the balance between the two, our bank account and as well as our books and other things. Generally, in any business, the balance in the bank account, that is balance in the bank books, that is bank books, books of the bank in our account. Our account is nothing but that they will give the statement. The statement is a copy of our account. So we call it a statement. So in the statement, the balance will be different. In our tally, the bank account balance will be different. Why they will be different? Because when you debit, they will credit. So both are okay. There will be no difference. But it means we have not entered. Say when you enter the amounts, the bank has to enter that on the opposite side. That might not be entered by the bank. That not reflected in the bank. When the some items entered in the bank may not be reflected in cash flow. So what are the reasons? And what we have to do is every frequent intervals, every 15 days, every week, every 15 days or every month, like that, we have to get the statement from the bank. So we can get the statement every month. Monthly once they will give the statement free of cost. So in addition to that, whenever you want statement, they will give, but they will charge you some amount. But if you have online access every day or every 2 days, every 10 days, every week, whenever you want, you can access our statement through the internet. So by accessing that, taking the printout, so we have to compare both the things. Both things, our account, that is, in the bank account, in our tally, our account in the bank is statement. The bank statement you have to tally, and you have to see which amounts are reflected in our book, tally, but not reflected in the bank. Whatever the amounts reflected in the bank, but they are not reflected in cash book. You have to see the differences, and they have to see the differences. If you make the adjustment of differences, by adjustment of the differences, we can know, we can reconcile. So this is our balance. Due to these reasons, the bank balance is showing this much. This is the bank balance. So if these differences are completed, that is, the differences are reflected, with all the differences, they are also reflected, then both the balances will be same. Okay, so for that, you have to prepare a statement. What are the reasons for the difference? So for that statement, you have to prepare. The statement is called bank reconciliation statement, because we are reconciling the balance in our books and the balance in bank books. So we are making reconciliation. That's why this is called bank reconciliation statements. How to make that, and what are the uses of the bank reconciliation statement? What are the uses of the bank reconciliation statement means? Sometimes everything will be okay. We will record in our books. The bank also will record. Then there will be, should not be any difference. But while entering in the books, we may enter a wrong amount. For example, it is 3,04,000. By mistake, we may enter last zero, which we omit, it will be 30,400. Or suppose if you miss the middle zero, it will be 34,000. So we entered a wrong amount, that the bank people will enter a correct amount when it is deposited. So there will be both recorded, but there is difference. So such a wrong amount. Sometimes we record correctly, the bank may record a wrong amount. Like that. If there is any wrong amount is entered by us or by the bank, so that can be rectified, that can be checked up, that can be known by preparing the bank reconciliation statement. Only when we are comparing that, so we can see this is the check deposited, this is the amount created by bank, whether the amount is correct or not. Everything like that we have to check up. That is one. Another one is fraud by the staff. Sometimes the bank, our staff, they will withdraw money. They will not keep in the packet. They will not give the money in the bank. They will not give the money in the office. So there is a fraud, but it is recorded in the bank, but the money we have not received. So we will not, the accountant will not record the withdrawal. So in such a case, it is a fraud. So if you reconcile, we can understand, see the difference. So amount is withdrawn from there, but we have not received the money. That means it is not recorded in our book. It is a wrong. So why it is not recorded? So who got that money that time? So like that, you can find out any fraud by the staff. Similarly, sometimes suppose we have two accounts. That is, one is State Bank, another one is Bank of India, for example. So we deposited in State Bank, by mistake we entered in Bank of India, or we deposited in Bank of India, by mistake we entered in State Bank of, that is, in the wrong account we entered, but the bank people will enter. So if we check out, we can know. So it is not entered by us. Bank is correctly, bank entered correctly, but we are not corrected. We entered in a wrong account. Sometimes we deposited in the State Bank, we record in the State Bank. State Bank also will record, but when the State Bank, sometimes they will enter some other account holders' money in our account by mistake. By mistake, they will enter. So by verification, they will know and they will rectify that. They will not, because the other party will not keep quiet. So they will rectify. Suppose it does not happen, so our account shows a different balance. So because by preparing the bank reconciliation statement, we can understand we have not deposited any money, but it is credited there in our account. So how this money we can see and we can inform the bank, we can get the rectification. So this entering in wrong amounts or entering wrong accounts, this also we can find through bank reconciliation. It's okay, but sometimes all the transactions issued, checks issued, checks deposited, checks issued, everything will go through us only. We deposit, we issue the checks. But sometimes some transactions will take place directly with the bank. So those transactions we don't know, so we will not record. So all these we are recording, so they will record in the bank also. Sometimes if their bank does not record, that will be different. That then only we will get different. Similarly, sometimes bank will record because the transaction takes place directly with the bank. So the bank will record. We don't have the records. We don't have record. I mean, we have not recorded. Then there will be difference. The examples are, correct examples. See, we prepared the paying slip. We prepared the paying slip for the check to deposit in the bank. So given to the account to somebody. So to go and deposit in the bank. He forgot, he did not deposit. So when you write the check in the withdrawal form, that is what you call paying slip, then immediately when by seeing the counter file, by immediately what we do, we enter in the bank account. We enter the bank account in the books, but it is not deposited in the bank. So bank will not collect the money, so it will not enter. Okay, right. So like that. Sometimes this is from our side. Sometimes some customers directly they will deposit in the bank, or directly they will transfer to the bank through bank. That is through NEFT or RTGS. Directly they will transfer to bank. We don't know. If they inform us, we can enter. If they don't inform us, we will not know that. We will not record that, but it will be recorded in the bank, but we will not record in our books. Okay. Similarly, sometimes we have some deposits in the bank. So we'll get interest. That interest will be credited to our account by the bank. So we don't know. We will not record that. So that is the difference. The balance will be different in the bank. Our account will be different. So like that, bank interest we receive. Sometimes we suppose we have overdraft. We have overdraft. In such a case, they will charge interest for overdraft. Or we have taken any loan. That also. Our interest will be debited to our account. So we don't know about that. They will directly, they will debit. We don't know. So there will be difference. Similarly, sometimes for giving services to us, bank will take some money called as bank charges for the services, that is collection of checks, etc. As well as for sending the money when you send to others through NEFT or RTGS, for that they will take some charge. So whatever the amount is sent to others, we know that we will record. But bank charges, we don't know. So they will record that we have to record later. So bank charges by that. Similarly, if you instruct them to wait from payments, they will directly pay life insurance premium or any rent or any interest. If you give instructions, they will exactly by the time, exactly on date, they will make the payments, but we don't know. So they will record, we will not record. Like this, means some transactions will be different because we will record, bank will not record. Some transactions bank will not record, we will not record. In such a case, there will be difference in this. In that case, what we have to do is, whatever is recorded in our books, but not reflected in bank, we cannot do anything. We cannot go to the bank and we cannot make the entry. So that will be kept as it will be difference. That is the reason for the difference. If any items entered in the bank, they are not reflected in our books, immediately those things we can record here itself. When we are making we are checking the statement, bank statement and our tally account, bank account. When we are checking, if anything is entered in the bank but not entered in the cash book, then we can make the entry. No problem. In our books, you can make entry whenever you want. So all those things reflected in the bank but not reflected in account in our books. So that can be entered immediately. So that difference will go, and all others, whenever our record shows, but the bank does not show. That is not reflected in the bank. They cannot be. We cannot go on bank to the bank and record that. Okay. So those will be left out. So those will be their differences. So as per our book, our balance is, for example, April, our balance is 82,300. 82,300. So after making all the adjustments, all this, and due to the amounts not reflected in the bank, not in our books, we can record, not reflected in the bank, due to them, the difference will be, there will be difference, and as per the difference, the bank balance will show a different amount. So it will show, as per our books, this is the balance. Due to the differences, bank book shows so much balance. Like that, we will prepare the reconciliation statement. How we will prepare that one? For that, see here amount, date column, this is the date of the transaction, and the particulars of the customers are what you received, how you received, or whom you paid, all these things. And this is the type of the voucher. This is the voucher check, voucher date, that is voucher number, and a debit credit. Only these are available. These are available. When you are checking up, you have to check up all the instrument numbers also, because we paid by check. What is the check number? So with that also we have to compare. So for all the details for making the reconciliation, we have to enable the reconciliation statement. How we will record? The option is available at 3 places. The option is available at 3 places. Number 1, see here, in the gateway of tally, see, after the transactions, cash book and voucher and day book, there is one option, utilities. In this utilities, only one option, banking is available. If you click that, so see the last one, bank reconciliation. So if you click that, so that it will show the banks. So whichever bank you want to reconciliation. So if you click that, so this is for the month of totally. We require for April, 1st April, 2nd April. Okay, only because our education version will support only 1st and 2nd day. So I recorded all the entries only for 1st and 2nd of April. In the month of May, 1st to 31st. In the month of June, 1st and 2nd only. So here you see, everything is shown, but extra, in addition to that, transaction type, instrument number, instrument date, because this date of entry may be different from the instrument we check. Check or when you made online payment, what you call that name, number, ID number, that is online payment number. All these will be available. These are the instrument date, that is instrument number, whether check number or NEFT or anything, this is the check. So these 3 columns are not available here. These 3 columns are not available. Now in the ordinary account, EAL, the State Bank of India, those 3 columns are not available. So higher after this, so before the debit and credit, our 3 columns, more columns are available. So one is, that is the place where in the gateway of tally, go to utilities, in that go to banking, at the end it will have bank reconciliation. That is one place. Another place is, you see here, whenever you are in any screen, go to, on the top you see, go to Alt G. So Alt G, if you click, here you can. So you need not search for that. So here simply on the top menu bar, just you can write where one reconciliation. Reconciliation, you write second. See here it is showing, we selected already. Bank, utilities, bank reconciliation statement or bank reconciliation, both are same. So reconciliation statement, if you select, so the same statement will appear here. This is reconciliation statement, you have to work on that. Okay, this is second place. So there are 2 places, and the other one is when you are in the bank, State Bank of India, when you are in the bank account, 1st April, 2nd April only. So every month you have to do separately. Okay, here. So 2 places. Third place is on the right menu bar, that is button bar. right button bar, you see Alt or reconcile. Alt or you can click the reconcile, or in our keyboard, Alt or you can type the same statement will appear. Okay, so this is our statement. We have to make the reconciliation here. How we will make? We have to compare each item with bank statement. So if the thing is reflected here and it's not reflected in the bank, it's okay. If you reflect in both, see in this case, generally in the bank, see this is the column. There will be another column. See here what is called value date or bank date. See here, this is the transaction date. Transaction date. But the amount checks deposited will not be created immediately. They will collect the money, then only they will enter. That will be reflected. Okay, so the date of reflection in the bank account is called value date or value date or bank date. So in this case, here it is given as bank date. The bank, it is called sometimes in some banks value date, in some banks bank date, and here debit is all deposits, credit is all withdrawals. That is deposits, checks is deposited, checks issued. Similarly, cash withdrawn also. Okay, but in the bank, they will show debit and credit. They will not show like this. Sometimes our deposits are debited. Here they will show on the credit side. They will show not as credit. They will show as withdrawals, deposits. So all our deposits debit. They will show on the credit side deposits, and credit payments withdrawals. Just like it means we have withdrawn money. So debit will be shown as withdrawals. Yeah. So deposits on the credit side, debit side withdrawals. The other side, debit side deposits, credit side withdrawals. They will show not debit or credit. Sometimes they will show debit credit. Sometimes this is called as withdrawal and this is called as deposit. So we have to check up both. If at every transaction we have to check out if reflected in both the places, and what is the date of reflection, bank date, that date we have to enter here. If you enter here, that is whichever is tallying, we have to hide them. So for hiding that, use the bank date means tallying, that is it is reflected in both cash our bank book and bank in our tally as well as in the bank statement. It is reflected. It means we'll do the date. And after that, when you accept this screen, so the amounts for which we give the bank date means reflected in both the places. So that will be hidden. And only those which are not reflected in the bank will be shown here. And whichever is not shown in our book, we will make the entry here itself. From by seeing that, you can make entry in our book. So that also will be tallied. It will be reflected in both the places. So first of all, we check up. See here, first we will check up debit, credit, both you can take. First debit, then debit means credit in the bank account. Credit means debit in the bank account, like that. We check up every one by one. Or you can see, first you can take all debits and then all credits, but it is better you take as per your convenience. Okay. First one you check up. See here, debit means cash deposit, 3,04,000. So here, there may be different dates, but we will give all these dates only here. First and second only we will give. Okay. The instrument date in there, the same date we will give. Okay. Because we cannot give other dates. See here, if available, we will give the bank date. See here, our amount is debited, deposited in the bank. So it is also showing the deposit, 3,04,000. So it is reflected. So we'll give the date. 1, 4. Okay, we will give the date. Next, second one. Second one, see, it is credit. It is payment of check, 20,000. So here, next one, credit means in the bank, it will show on the debit side, 121, 111, step number 121, 111. So it is reflected in the bank. So here also. So again, it is also 1,4. Okay. Then next one is that's debit. Debit means deposit. So deposited check, 10,000. The check number is 874,521. See here, check deposited 874,521. It is reflected. So it will do the date 1,4. Then next one is credit means check issued. We issued the check 112. So here credit means debit here. Debit 25,000 here. 25,000. It is shown. So it is reflected. So it is also reflected 1,4. But here, this is reflected. Then come to this side. So 10,000 is completed. And now come to this side. 11,000 rupees is, that is receipt from the receipt 11,000. You see 11,000 receipt check number is 119,713, 119,730 received. So it is also reflected 1,4. Okay. And then another one in between that, there is one amount 60,000 we received by NEFT. So receipt. So we entered in this side, debit side, receipt by NEFT we received. So it is also reflected in the bank. So all these are reflected, and up to this completed 1, 2, 3, 5, 6, up to 6. So 1, 2, 3, 4, 5, 6 reflected. Next one is 13,100 rupees. 13,100 rupees clearing, that is supply, means this is debit means withdrawal. Our side 13,100 rupees is check payment. We paid by check 13,100. It is also reflected here. So here date is 1/4 again. But this also related. And then after that, see 44,600 rupees. This is also transferred to supply B. 44,600 rupees. You check up. So payment check number is 114. This is 113 and this is 114. 20,000 rupees. Sorry, 44,600 rupees. 115. Sorry. Amount is okay. We'll check out. So this one 44,600, it is reflecting. So 44,000 is reflecting 1/4. Sorry, 2/4. You can do that here in the calculation. So 2/4 reflected. In between that, there is one amount. See here, 20,000 rupees. We made the payment. We made the payment 20,000. It is not reflected. So okay. So later we see it is not reflected, and then so we will leave at it. Which is not reflected, we will not write. Then again 1 lakh. After this 1 lakh transferred. I mean we received from customer by NEFT 1 lakh. That is deposit. So here we have to see on the debit side. So there is no 1 lakh is not available here. So 1 lakh we received. 1 lakh. So what we do is now that is received by NEFT, received directly to the bank. We don't know. We have not recorded. Now we have to do that. We will remember immediately. We can record in our books. So now immediately we will record this in the books. That is on 2nd February, 2nd April. We will record this 1 lakh received by NEFT. Okay, we can record now. Okay, how we will record is here. So we should not go back to record the transactions. If you go back, all these dates given, they will go up. Again, it will be as it is. So here what we will do is, so all these will be accepted. These are all reflected in both the places. They will hide. That's to make them hide. Now we can accept this what you say, we can accept this screen. We will go enter and accept. There will vanish. Or now we have to make the entry here. Now when you are making the entry, it will ask you to accept. To accept, that will go and we will make the entry. Like you see here, we have to make the entry, create the voucher. So here, see here, Alt J, create voucher. So if you click here or click Alt J, it will ask you, see, accept. All these are things centered here. Do you want to accept? Yes. Accept means they will be accepted. Now we will make the entry. That is on 2nd only. We received 1 lakh by NEFT. So we have to make receipt the same date, 2nd April, received by NEFT. So credit means from whom we received. We have to credit the party from whom we received. We don't know from whom we received. So for the time being, what we will do, we will keep it in suspense account because we don't know from whom we received. And later we can verify and then we can change the name. So here credit is given to suspense account. So we call it as bank suspense account. There is some differences will be posted in some other account. Suspense account will be available, but here it is related to this bank. So we will create account bank suspense account. Bank suspense account. It is only actually the bank suspense account is simply it is maybe a liability or an asset. Actually we received it. We received the money means it is a liability. So simply we will take up current liabilities. We will take it as current liabilities and accept. So what is the amount? 1 lakh. So we will write 1 lakh. And where you received? State Bank of India. State Bank of India received. Okay. So by how you received? You received by NEFT. So we take it as funds transfer. Yeah, press the space bar. You will get here. So funds transfer means we got what? By NEFT. NEFT, you know, NEFT, no. NEFT you received. So we received by NEFT. So here, if we accept this, so this 1 lakh is shown here now. No. So this is also tallied. No. So second, we'll do the bank date, 2nd April. Okay. Accepted. You see now. Now you see, all those we have already given. All those we have given the dates. So they are hidden. They are hidden. Okay. This is not reflected in the bank. It is available. Then next one will go after this. This is completed up to this. Now, next one is check to deposit 365 400. 365 400 13,000. So here you see deposit check 365 400. So 2nd April, it reflected in the bank. Immediately see here, this check is returned. This check is returned. So this check is returned means you should be credited. We debited this as deposit. Sometimes some banks will enter the amount. When the check is collected, it's okay. If it's not collected, they will reverse. Like this. They credited the amount. So when the check is returned, then immediately they debited this. So it is not shown here. So now we have to make the entry for this 13,000 rupees of check return. So from whom check returned? 13,000 we received from 13,000 we received from customer E. See here, 13,000 we received from customer E. 365 400. That is check now bounce. So again you have to make the entry for this 13,000. So create voucher. It will ask you accept. So now we have to record this transaction. Check is bounced. In which voucher we will record? Received money, received, paid, payment, purchases, purchase voucher, sales voucher. But when the check is bounced, which voucher we have to record? But some people are they do is check is received, we deposit in the bank. So check is received, we record just receipt account, receipt in the receipt voucher. When the check is bounced, they will record in the payment voucher. So it is wrong. It is not payment account. It is not. We did not record in the payment voucher. We have to record it in the journal. You know, when at the time of the vouchers, accounting vouchers, we learned what are the transactions to be recorded in all the other vouchers, all the vouchers. So all the transactions which cannot be recorded other vouchers that we recorded should be recorded in journal. So we have to record in journal, and date is the same 2nd April, isn't it? 2nd April. Then check is returned. So that is from you see, you know that we saw that from where? From customer E we received. Now the balance is closed, but the check is bounced. Again, it becomes a debtor. So customer E, how much amount is 13,000 rupees? 13,000. See, it will show on account only because when he made the money, paid the money, issued the check. Then when you are making the entry, the new reference when we sold goods or something, when you are making the money, receiving the money, against reference we will finish. Now there is no against reference. The bill is closed. So now it will be entered in the on account. On account 13,000, State Bank of India. So the check number again we can enter. What is the number? Check number is 365 400. 365 400. This is the check bounce. Check bounce. So we can do. So here, you see here, 13,000 rupees. See, it is here. Okay, 24. So when we are making the entry will show up. So that we have to give the number. Okay, accept, we will make the accept later. And after that, see here. Then, so after this 13,000 on 25,000 is there. See here. After this 30,000, 25,000 is there. So 25,000 is available. So we can give 4. So all these items on the credit side of the bank completed. On the debit side, we completed up to 13. Okay, there is a check return. When the check is returned, they are charging some money. So check return charges is called as bank charges, as well as check book issue charges. This is also called bank charges. They charged this twice. Bank charges 250, bank charges 250. And LIC premium 1,000 rupees they pay directly. LIC premium. So all these three items, you have to make the record now. So what you do now, how you will make the record? Again, create voucher, accept. Okay, here, these are all payments only. Because check return charges and checkbook issue charges, bank charges means we are paying to the bank because bank will take from our money. It means we are paying to the bank. Okay, now we have to take the payment. Payment date is 2/4. 2/4 payment, and then here check return charges, they are called as bank charges. So it is expense, will create bank. Whatever bank is charging, that will be taken as bank charges. It is sorry, indirect expenses. Indirect expenses. Then save that. Save that. What is the amount? 250. So 250 to State Bank of India. So bank charges, not charge, it is others. Others you can write. So it is directly debited by bank. So direct debit, directly debited by bank. So direct debit. Just you can write that. In narration, we can write bank charges about what? Check return charges you can write. And another one is, this is one. And another one. What is the 250? And again, voucher. Create voucher. Next one is cash, check issue charges. For this also, we will write as bank charges. Bank charges amount is 300 rupees. 300 rupees, State Bank of India. For this also, others, direct debit. Direct debit by bank. Direct debit, you will write it as checkbook issue charges in the narration. Okay, so these two we completed, and one more is remaining here. That is LIC premium paid. Again, you have to make the entry. Again, you have to make the entry, accept. So here, this is also payment only. So payment, but the bank paid the money. Whom we paid as LIC premium. It is not bank charge. LIC premium paid is our expenditure. So we should not enter as expenditure because LIC premium is for human beings. That is for the proprietor, not for the company. So company, there will be no LIC premium. So LIC premium paid for the owner means it is nothing but withdrawal by the owner. It is the expenditure of the owner. So we have to take it as open account, withdrawals account. Withdrawal account. You can take this withdrawal account. It comes under capital account only. Capital as well as withdrawal comes under withdrawal account. That is capital account. So here, withdrawal, how much is done? 1,000 rupees. 1,000 rupees and State Bank of India. So here also directly paid by bank. So others, you can take direct payment. You can take a direct payment. You can take. It's paid already. We are not giving bank charges to the bank. Bank paid the money. We are paying to the bank. So direct payment, you can take that as proprietors like LIC premium paid. LIC premium paid. So okay. So up to this 25 also completed. Okay, all these three. So they are all from the bank. We are taken here from the 30,000 already done. These three also had done. So 2/4, 2/4, 2/4. Okay, done. Okay, done. Then you go. This is over up to 300 rupees. Then you see withdrawn by check 2 lakhs. That is here. Here we completed. Here in the top 2nd April there are 2 lakhs. The entries we made now. So 2 lakhs is there. 2 lakhs available. So 2/4, 2 lakhs available. And after that, so it is also payment by NEFT. We paid by NEFT 50,000 rupees. So 50,000 rupees NEFT we paid to Kaplasi. It is also available. Okay. So all these are available. And in addition to these, 1, 2, 3, 4, these are not available. Second year, 25,000 rupees. 25,000 supply. Okay. So all this is over, completed. Now 1, 2, 3, 4, 5. These are not reflected in the bank. So it's completed. Now accept this. And now go to again Alt R. See here. So here, these are the things which are entered in the bank, but not entered in the cash book, our book. So we enter that. So difference is closed. And all others, both reflected in our books as well as bank, all are closed. all these items, 1, 2, 3, 4, these items are not reflected in the bank. So that will be the are not reflected in the bank. That is checks deposited as well as checks issued. We entered, but in the bank they are not reflected. So what you do here? So if you make that, and now it will show. So after making all these, well, as per our books, what is the balance for April? 1,67,750. So 1,60,750 is the balance as per company books. After these differences of adjustment, balance as per the bank, 1,55,750. In the bank, what is the balance? 1,55,750. So this is our balance. This is the bank balance. The reason for this difference is these are the changes. See here, these three are deposited. Means when you deposit, our balance will increase. So this amount is after these deposits. So these deposits are not entered in the bank. So bank amount book will be so less amount. That is why these things are to be reduced. 57 if we reduce 1,750. 1,10,750. Sorry, 1,10,750. These are credited. We paid payment, but bank has not paid. So bank will show will have more amount. Our amount is reduced due to withdrawals. That is payments. So 45. So 1,10,750 plus 45. You have to add it. But reduce this, add this. If you add that 1,10,750 plus 45, 1,55,750 is the balance shown in the bank book. Okay, now tell it. Okay, now okay. Now these are the things not reflected in the bank. So when they will reflect, they may reflect in the next month. So in the next month, when you are making the reconciliation for the month of May, the old ones, that is pending amounts means not reflected in the bank. They are the reasons for the difference. They will be reflected in the next month. So all these will be shown in the next month also, along with the May transactions. In the beginning, these amounts also will be shown. If these amounts are reflected in the next month, they will proceed there. So now this is for the month of April. So we don't have the other statements. So now we will go to now. We will close this. Now we will go to May 1/5 to 31/5. May 31/5 lakhs. So here, you see here. See, these are the transactions for the month of May. So we have to reconcile them. So when you are reconciling them, alt are the old amounts which are not reflected in the bank, they will also show up. See, alt are, see here, April 1, 2, 3, 4, 5. So these 5 amounts relating to April are also showing up because they will reflect in this next month, in this month. For example, this is check. So this is 1st May reflected, for example. This is 2nd April. It reflected in the 2nd May. And this is again check. This is not reflected, for example. And this is 25,000. This is the 2nd May. This is reflected. Okay. And the other one again, this is not reflected. Only 3 of the last month reflected in this month. Okay, there are. And then here for the month of this is what. Then for the month of May, see here, this is checked. So this reflected on 2nd 5. This is also checked. This reflected on the same date, first May. And this one, this is not 6,500 not reflected. And then next one is 5,000. This is reflected 2nd May. And the second one is this is same bank transfer. Next means it will reflect immediately 2nd May. This is end of the month. So this is not reflected in this month. So for the month of April, 1, 2 of April, they have not reflected. And in the month of May, 3 have not reflected. Okay. Now if we accept this, so all this will go and only the transactions which are not reflected in the bank in both the months. They will show 1, 2 of April, 2 of May will reflect in the next month. So now we see alt or if you go see only 4. 2 from April, 2 from May, they are only showing. So in the month of May, the bank balance will be 1,35,250. Now we will go to June. Now we will go to June. So this is the transaction for the month of June. 1, 2, 3, 4, 5 transactions. If you want to we go to the reconciliation. So for the month of April, 2 are pending. For the month of May, 2 are pending. So all those are also showing up now. These are the part. I mean, before this June transactions, the whole transactions which are not reflected in bank will show up. Now you see April, 1st June. April, that is gone. Second one also gone, 1st June. Okay. And 1st May, gone 2nd June. 31st May, it is not reflected. Okay, it is there. And 1st June. So this one, 1st June, reflected. These two are left only. So 1st June, 2nd June, they reflected. Both are left. The third one, 2nd June, this is not reflected. And this is reflected. And this is also not reflected. That means for the month of May, 1 is not reflected. For the month of June, 2 are not reflected in the bank. Now if we accept this, so this will be over. And now go to see reconciliation page. See, for the month of May, 1 is pending. For the month of June, 2 are pending. So this is the reconciliation. So in the month of June, this is our balance, and balance as per booked with bank book will be this one. If you have statement, you can see this one. Suppose in the month of June, and 2nd, there is also again bank charges. So it's not entered in the bank, it is available. So in such a case, create voucher. You will go, the bank charges means is payment. So payment 2nd June will take bank charges. For example, 250 bank charges, State Bank of India. So here others, they call as direct debit. So entered, and this is to be reconciled. This is to be entered. It is entered in the bank. 26. Okay, this is also done. So here only these 2 for June, 1 for May. These are available. They are still pending. They are showing in the. This is the bank statement. This return statement every month you have to do this. And now our bank balance is this. Our account balance is this one. This is the balance in the statement. Both tallied. Due to these results, that is the difference. They are tallied. This you have to take the printout and you have to keep in our file every month, every 15 days. Whenever you make the reconciliation statement, that reconciliation statement should be taken as printed, and it will be kept in the bank file. Okay. And in the month of July, if you see, in the month of July, when you are reconciling, so May month, 1 amount, June month, 2 amounts, these will be shown up in the beginning, and then July transactions. When if these reflect in the July, so these will hide up. Like this, we have to make the bank reconciliation statement. So every month we will go on doing this one. Okay. So this is about our topic today, bank reconciliation statement. I think you understand well. If you have some doubts or something, see the video once again, then you can understand. Okay, right. So with this, I close this session today, and I wish you learn very well, getting expert knowledge and become expert accountants. And wish you all the best. Thank you. Bye.